Realistic expectations are necessary if the purchase of a new or newer car is going to happen. Lenders are hesitant to approve bad credit car loans if the customer is looking at a car beyond his or her means. If pressed, a lender might approve financing to terms of 5 to 7 years to make a high-priced vehicle affordable. But a responsible lender will attempt to steer a new car buyer to choices that are more in line with that buyer's budget and income, or simply not approve the application. Depending on who is financing the vehicle, the assumption of risk grows depending on the price of the vehicle being sought by the borrower and the ability to pay for the vehicle. People with bad credit are not always rejected out of hand for car loans if their incomes indicate that they make the payments on a high-end car. But what lenders prefer to see in a customer with bad credit is someone who is looking at reliable transportation that he or she can pay for within a reasonable amount of time, 36-month and 48-month car loans being the most common terms. Since interest rates play a major role in how bad credit car loans will affect the pocketbook of a consumer, keeping the cost of the new car as low as possible without sacrificing dependability becomes a lender's chief concern when it comes to approving a loan. Since the interest rate will be higher than prime due to a customer's bad credit, shaving money off the price of a car can save hundreds, even thousands of dollars over the cost of the loan. Bad credit car loans means higher interest rates. There's no getting around it. But wise shopping when it comes to financing means that a potential borrower can avoid the worst possible interest rates in order to make the car loan more affordable. Since lenders do compete for business, they tend to offer bargains. Some of the bargains they offer are time-sensitive, while others offer teaser rates on what are variable rate car loans. Special offers on car loans aimed at consumers struggling with bad credit are similar in concept to sales at department stores. Many offers come with the caveat of "for a limited time only" in order to drive car loan sales during certain times of the year. Low-interest financing or no-interest financing on bad credit car loans is one of the most common ways lenders bring new customers into their businesses. These bargain rates are offered for the first year on variable rate car loans to draw in a new borrower, then climb to a higher rate for the remainder of the car loan's term. This can represent the best of both worlds to the consumer with bad credit, as it can make a car loan more affordable at the outset with lower monthly payments, with time to prepare for the increase in payments which begin after the first year. The primary hazard to this sort of financing is that the rates can climb to levels that make payments difficult to afford, creating the risk of falling behind or defaulting on the loan. All lenders are required to inform their customers up front of all the conditions regarding any loans they make, which most do even before they meet face-to-face with a new loan applicant. For people seeking bad credit car loans that won't leave them broke and carless, this places the responsibility of choosing the right lender and an affordable car loan directly in their hands. Lenders describe in detail their terms and conditions and make them available for viewing, either through their websites or in printed materials in their office. When a borrower gets approved for a bad credit car loan, the assumption is that he or she has found the financing suited to their needs and has effectively the cash in hand to buy a car. This gives the borrower the option to purchase a car on any lot and walk away if he or she can't find the right deal. This isn't the case if that car shopper is going to the dealership for the loan. Dealership financing has a few disadvantages over traditional lending institutions when it comes to approving bad credit car loans. Since a car dealership is not a bank, it acts as a mediator between banks and borrowers, which creates additional costs to the individual seeking financing. There is also a tendency to sell loans to customers that might not be suited to their needs, but makes more money for the dealership's loan agent as he or she typically works on commission. For someone with bad credit, however, the dealership's financing department may be the only option toward getting car loans. The dealership has connections to financing packages specific to certain vehicle makes, models, or sales exclusive to that car lot. While interest rates might be higher for bad credit car loans in the car lot, there is a better chance of being approved since the dealership knows how to get that car back if the customer defaults on the loan. Bad credit car loans are an integral part of the modern economy as prices rise and incomes shrink. Among the car financing industry, the solution has been to make car loans more readily available to consumers, whether they have bad credit or not, by easing application standards, modifying how interest is charged, and greater creativity in designing loan packages that more people can afford. Where a record number of lenders exists, there will be fierce competition for a piece of the market, which includes those customers with bad credit. Car loans aren't handed out like samples at a supermarket, but there is a thriving and diverse field of lenders willing to work with customers at all economic levels. Federal Auto Loan. Good credit, bad credit, no credit, all good.